Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the UK economy and specifically to talk about black holes. Now, black holes are normally something that you associate with space. However, following their election win in July 24, the Labour government instigated an investigation into the UK finances and they identified a black hole of £22 billion that they said had been left by the previous government, that they didn't have enough money to be able to fund all of the spending that they'd committed to. And in order to rectify that black hole, in the October budget, Rachel Reeves increased taxes by the highest level since 1993 to increase the public finances by £40 billion, offsetting the £22 billion black hole. So based on those figures, you would think that everything is fine. However, if you've been following the channel, you'll know that things are not going to plan in the UK right now. GDP is lower than originally expected, debt levels are higher, and debt costs have gone through the roof. And as a result of those changes, the UK is now facing a new black hole of more than £30 billion. The current UK government spending plans are based on a report that was put together by the Office of Budget Responsibility, or the OBR, in October 2024. And despite the fact that that report was put together only 3 months ago, a lot of the figures are now outdated and mean that the Labour government is now facing shortfalls in terms of the income that it's going to receive and also increases in its spending. This chart, taken from the OBR report produced in October 24, shows the forecast rate of GDP growth for the UK between 2024 and 2029. And we've got 3 different coloured bars for each year here. The yellow bar shows the original March 2024 forecast. The light grey bar shows the October forecast before Labour's budget measures, and the dark grey bar shows the forecast after Labour's measures. So if we start off by looking at the figures for 2024, the original real GDP forecast made in March 24 was that the UK would grow by around 0.75%. However, that figure was upgraded to 1.1% in October. Now, interestingly, when we look at the 2025 forecast, the original forecast made in March 24 was that the UK would see 1.8% growth. However, in October, before the budget measures introduced by Labour, that figure was actually downgraded to 1.5% and then re-upgraded to 1.95% after taking into account the measures in the Labour budget. Now, one of the other things that's interesting about this chart is that in 26, 27 and 28, the original forecasts put forward in March 24 were actually higher than those in October after taking into account the Labour budget. And as you can see from the dark grey bars which show the latest forecast, real GDP growth is actually expected to fall after 2025. It peaks at 1.95%, then drops to 1.8% in 2026, and then falls to 1.5% in 27 and 28. So those forecasts are what the current UK government have based all of their projections on. However, as you'll be aware, GDP hasn't been going to plan over the past few months. This chart shows the year-on-year growth rate in UK GDP, which is reported quarterly over the past 3 years. And if we focus in on what's happened in 2024, at the end of the first quarter of 2024, the 12-month growth rate was 0.7%. It fell to 0.4% at the halfway point, and the latest quarterly data that we've got, which was published in November, shows that the UK has achieved 0% growth, so no growth in GDP. And just to remind you, the forecast figure by the OBR was full year growth of 1.1% for 2024. So that would mean that the final quarter will need to see significant growth in order to get close to that 1.1% figure. However, this chart shows the month-on-month movement in GDP, which is the latest data that we've got available. And it shows that in September and October, GDP actually fell by 0.1%. And in November, we have only seen growth of 0.1%. So there is a very strong indication at the moment that it's likely that the UK full year GDP growth figure will come in significantly below that 1.1% forecast by the OBR. And if we look at this chart, which compares the forecast growth in real GDP for the UK by the OBR, which is shown by the yellow line, and the latest forecast calculated by Bloomberg using the data put together by 50 private sector economists, which is shown by the black line, you can see that there is a clear divergence of around 2% in these forecasts. In every single year, the OBR, which is what the government are basing their spending plans on, is more optimistic than the Bloomberg economists. This chart, which is taken from the OBR October report, shows the public sector net borrowing in the UK between 2001 and forecast out to 2029. And once again, what you can see in the forecast section of this chart are three different lines. We've got the original forecast that was made in March 24, which is shown by the yellow line. We've got a dotted line which shows the forecast made in October excluding the changes in the Labour budget. And then we've got a blue line which includes the changes in that budget. And what you can see is that the latest forecast has actually increased the amount of debt, so it's at a higher level than the orange and the dotted lines. However, the OBR report assumes that the level of debt actually reduces over the next 4 years. Now, in terms of assessing whether or not that reduction in debt is realistic, this chart shows the latest data available for UK public sector net debt, and it shows that in November 24 there was an increase from £2.78 trillion in October to £2.82 trillion in November. And in terms of putting that into context, this chart shows public sector net debt to GDP. And as a result of the falling GDP, you can see that between October and November, there was a significant increase in the percentage from 97.3% to 98.1%. This chart, taken from the OBR October report, shows the forecast 5-year gilt yield for the UK. And the reason that this is important is that the gilt yield basically equates to the cost of debt for the UK government. And as you can see, at the time of the report, the 5-year gilt yield was sitting at 3.75%. And that was projected to increase over the following 4 years to around 4.5%. And if you look at the shape of the line, it was expected that the gilt yield wouldn't increase to more than 4% until partway through 2027. However, this chart shows the actual movement in UK 5-year bond yields over the past 12 months. And what you can see here is that over the past 4 months, there's been a significant increase in bond yields in the UK. And the rate actually increased beyond 4% on the 22nd of October 24 and is currently sitting at just under 4.5%, so significantly higher than the projections put forward in the OBR report. And this means that the UK government's debt is now costing more at a time when it's also taking on more debt. So this is a double whammy, and in fact it's now a triple whammy when you take into account what's happening with GDP. This chart, taken from the OBR October report, shows the potential output growth for the UK between 2023 and 2029. Now, the bar charts here are made up by a number of different constituent parts. The green section at the bottom shows the employment rate. The purple section above that shows the average hours that people are working. The yellow section shows productivity. And the blue section at the top shows the adult population. And the black line that we have across the top of this chart shows the potential growth in output for the UK, measured against the scale on the left-hand side, which is a percentage going from -1% at the bottom to +2% at the top. And what this chart shows is that in each of the years from 2025 through to 2029, the OBR is forecasting growth of around 1.5%, based predominantly on an increase in productivity. You can see that the biggest section of those bar charts is the yellow section, so it's assuming that productivity gets better in every single year between 2024 and 2029. Now, this chart, which has been put together by Bloomberg, looks at the actual increases in productivity in the UK between 2010 and 2024, shown by the black line, and compares the OBR forecast, which is shown by the yellow line, against a continuation of the long-term historic trend, which is shown by the pink line. And once again here, you can see that the OBR forecasts are far more optimistic than the long-term trend suggests. So basically, the UK will have to start overachieving in terms of its productivity growth in order to meet those OBR forecasts. And just to remind you, the UK government has based its spending plans on that OBR forecast. So what's the summary and conclusion today? Well, I wanted to post this video because we've talked a lot about what's going on in the UK right now. But I think one of the problems that we've identified in today's video is that the current UK government have based their spending plans for the next 4 years on a report that was produced in October 24 that already looks outdated, because that report assumed that the UK was going to achieve good growth in GDP, that its debt figures were going to come down, and that its borrowing costs were going to rise relatively slowly. But what we've seen over the past 4 months is the opposite of all of that. We've seen GDP faltering. It's actually come in at 0% for the latest quarterly figures. And we've seen that the monthly figures are not showing a remarkable recovery, which is what's needed in the UK in order to get close to those OBR figures. We've also seen an increase in public sector borrowing, despite the fact that the OBR said that it would actually be coming down. And the cost of that borrowing has gone up rapidly. We're at levels not forecast to be hit in the UK until around 2029 already. So all of that is really bad news from the UK government's perspective, and Bloomberg have estimated that based on the current run rates of GDP, public sector debt and borrowing costs, the UK now has a black hole of £30 million, and that is a new black hole on top of the 22 billion black hole that was fixed back in October. So what that tells us is that in order to fix this black hole, the UK government is going to either have to increase taxes significantly, another 30 billion is needed to be found just to offset where we are right now, or it's going to have to introduce austerity measures, cut its spending by £30 billion. And neither of those things are good news for the UK government, the UK economy, or the UK people. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.